Hey, good evening to everybody that is rolling in here. This is the Saturday morning workshop for tax sale support. My name is Ferre. I'm here with Stephen Swenson, and this is a free workshop that we put on occasionally for anybody that's interested in attending. And so we're happy that you could join us. I think we'll have people coming in here over the next few minutes. But we like doing these webinars. It's always been something enjoyable that we've done. And yeah, this will be the one for December, last one for the year.
Yeah, exactly. It gives us a chance to kind of share some of the things that we do with tax lien and deed investing and some of the strategies we utilize. And I think it gives a good opportunity for investors that are just getting started or that are interested in tax liens or deeds or may not know a lot about it to get an overview of how it works.
Yeah, which I think everybody that's here, chances are you've come to us through some of the same ways or same means. If we were to guess, maybe some of you know a lot about us, maybe some of you don't, but a lot of you probably came in contact with us through the videos that we have on the internet. We've got a lot of free videos that teach different aspects of tax sale investing, and we've been teaching tax sale investing since about 2007. We got involved with it right before 2000 roughly, and really it was an interesting time to get started with tax sale investing, but I'm glad we started when we did, because we were able to see a pretty incredible transition, and what we're witnessing has been amazing.
Yeah, exactly. I mean, when we first got started with tax sale investing in early 2000s, essentially, we studied everything we could about it, and we actually started going to work for different training companies as tax sale coaches and trainers. And one thing that we were able to notice is all of the problems that some of the tax sale investing programs out there essentially had with their programs. And so through that process, we not only through working with students up until we started our company in 2007, but just through our own studying and investing, we were able to go through a lot of the pitfalls and really put together a program that streamlines tax sale investing and hopefully makes it a lot easier for investors.
Yeah, in fact, one of the reasons why we understood what the problem was with the tax sale training out there and the programs, even the real estate training at the time, we knew it didn't work very well because we had used it. We were in the exact same situation that all of you are in that we were interested in an investment. We were trying to figure out how it worked, and we were realizing some of the shortcomings of the stuff that was out there. And we also realized at that point the overall problem, which was really, I guess there's a lot of reasons why tax sales have never been at the front of investors' minds, and those are all things that we learned about. We learned why it's one of the more obscure investments and why you don't really hear a lot about it. That finally started to make sense to us, and we were able to put together some systems that helped us dramatically with investing and with understanding how it all works. And one of the things that you'll find about us again and again is that certain things are important to us that maybe aren't important to everybody that does this type of thing. The idea of people paying huge amounts of money for training is something we don't like. We watched people for many years spending money that they really should have been using to invest to buy different training things from seminar companies, and they were spending huge amounts of money, $10,000-$20,000 or more, and they weren't really getting anything out of it. It was really it was a tragedy. We hated to see it. We hated to see people that had really been led the wrong direction because of the sales goals of different companies, and we hated to see overpriced training, that didn't really provide a whole lot of actual support and help for the person that needed it. And so it's one of the reasons why we decided to break off from seminar companies and to start providing training directly to people on our own, because it enables us to do it for about a fifth of the price or less. there's so much overhead, there's so much cost tied up in trying to do events, and in being the seminar companies have their own problems. We like the fact that we can bring the training directly to you, that we can control the cost and keep the cost way down so that you can take the majority of your money and use it to actually invest and make money.
Yeah, exactly. Most of our students or investors that we work with find us through one of our websites. We also have a lot of students that have worked with us in the past that will find us. But really, that Shade's exactly right. Our goal and the reason we do this is to help others make money, to really train and teach. This is something that we love to do. It's something we've been doing for really all our whole adult lives. We've been spending essentially 20 years or close to it researching, investing, studying, training, and helping others do the same with tax sale investing.
Yeah. So if you're new to tax sales, then we're happy to welcome you here, and we hope that we can explain things in a way that makes sense. If you're not new to tax sales, I think that all of this can still also be beneficial for you, because the way that we look at tax sales and the way that we view things has changed and evolved over the years as well. And so we wanted to talk just for a second about a couple of basics related to tax sales before we can kind of dive into some of our interest, what we're particularly interested in with tax sales. But in the beginning, one of the things that we figured out that was making it so difficult for people to understand tax sales was the lack of uniformity across the country. Okay, we found there were roughly 3,300 counties or municipalities in the country that collected some type of property tax, which also means that they have to be responsible for enforcing the property tax. But among those 3,300 counties, what we found was that what determined how a county operated is the state laws that the county was using for property tax collection. And state laws, well, there's 50 different sets of state laws. And so that added to the confusion, and there was no real interaction between counties. So you didn't really have counties from one area talking with counties from another area. The counties all pretty much operated independently. So there was a lot of confusion in how the system worked, because nobody had ever, I think, taken a step back from the county or state level to look at how they worked across the country. And that was how we tried to approach it, was to figure out how they worked across the country so we could identify that and understand it better. Once we did that, we figured out that there were three systems basically that were used: tax liens, tax deeds, and what we call redemption deeds.
Yeah, exactly. When we first got started, we knew about tax deeds or tax foreclosures because essentially that was the first auction that we attended. We attended a local tax foreclosure auction. And then as we started studying, there was books on tax lien certificates, but there wasn't a ton of information even on tax deeds. And then when it came to redemption deeds, there was nothing that really taught you what a redemption deed was and what made it different than a tax lien and a tax deed. And so what we decided to do was really, as Shade mentioned, go through and determine what the states are. And that's part of the reason is that there's 50 different states, and every state has their own laws. Some of the states will be more rigid in how their tax sales are conducted. Some states will give the counties more flexibility to do it. And so because of it, with 50 different state laws, it made it confusing. And so essentially, there's three different ways to invest. As we mentioned, tax liens, tax deeds, and redemption deeds. And each one has a different strategy or really a different outcome as far as an investment.
Yeah. What we realized was that tax sales are way more diverse than we ever realized initially coming into it. I think originally coming into it, I didn't really understand tax deeds at all. I kind of understood tax liens, but what we started to realize was that there were some real benefits and advantages to each one of these systems, depending on what it is that you wanted personally. Okay. Now, there are so many different things that have changed about tax sales over the last 20 years. I mentioned earlier that I'm glad that we started when we did, because we've witnessed really the evolution of tax sales and the direction I think that it's going here in the future. But today, the main point is that it's much easier today than it was 5 years ago, even, or 10 years ago. I mean, when we initially started, 15, 20 years ago, the strategy to invest was still about sending out form letters to counties, trying to get them to respond with information. It's changed so dramatically as a result of the internet now that really what it did was it made it possible for people to invest out of state. It made it possible for people to invest from the comfort of home in real estate in different parts of the country for the first time ever. I don't think there's ever been a time before this where it was really very feasible that you could actually invest in real estate from home using the internet without having it be ridiculous.
No, I mean, if you were going to do real estate investing, 99% of real estate investors did it within their own area. And that's something that's changed with the internet. I mean, before, researching county records was a lengthy process. I mean, if you had, 50, 100 properties to go through, you were going to be going through county records and Rolodex cards. Yeah. Exactly. Looking for this information. And now with just a click of the button, we can pull up property records. We can pull up court records. It just makes it so much easier. And also makes it easier to invest in other areas of the country. Where we live here in Utah, we have tax sales once a year, but the properties that come up for sale are limited. And so, unless we just wanted to try to buy a couple of properties a year, we would have to look in other areas of the country. And that's one thing that's made the internet and really all of the tools that are available that much different than it was, 20 years ago.
Yeah, something else that happened as well as we started to dig in and learn about how tax sales really worked. And one thing that was interesting about it was that the more we learned about tax sales, the more we understood every other form of real estate investing, because in a way they're all connected and linked. And once we understood the mechanics of tax sales, we pretty well understood most forms of real estate investing. And we also began to realize why certain types of investing worked and why certain types didn't work. Originally at the time there, I remember thinking that bank foreclosures were a good way to, pick up real estate for a discounted price. But that viewpoint has changed dramatically over that time period. In fact, we don't bother with bank foreclosures, and we never would. And there are reasons for it. Now that we understand the process better, I think we understand that bank foreclosures can only offer us a limited amount of discount. There's only so much money that a bank foreclosure can save us, because at the end of the day, you've got a bank that still wants their money. You still have that personal interest in the property that prevents them from selling it for much less. This is the only form of real estate we found that doesn't have that personal interest in the property. We don't have that bank on the other side of this that wants to get their money out of it. We've got a county that's just asking for what's owed, and beyond what's owed, they don't care. It's incredible the difference that something so simple makes when it comes to real estate investing. It's the difference between being able to find property for 90% of market value or being able to find property for 10% market value.
Yeah, exactly. In addition to the competition that you're going to have at a bank foreclosure, and the fact that the property is going to be listed for probably near what the market value is, sometimes even more than the market value. The tax sale foreclosure process, that the foreclosure process essentially eliminates any liens or mortgages or things like that against the property. And now when you're purchasing a bank foreclosure, you're essentially only buying that bank's interest, which means that if there's additional liens on the property, if there's a second mortgage, if there's anything like that, that you're going to be responsible for that, because essentially you've taken on the bank's position on that particular property. When we're looking at tax sale foreclosures or tax deeds, or even foreclosing on a tax lien certificate, you're essentially going to be going through a foreclosure process that's going to allow you to receive the property free and clear, essentially.
Yeah, in fact, one of the things that we learned a lot about was the judicial foreclosure process. You know, we learned the differences between the different types of foreclosures, and we started to learn all of the benefits that were associated with tax sales. And like Steve mentioned, you know, that foreclosure process they go through is a powerful foreclosure. Wipes out, extinguishes anything. In fact, now we would hesitate to buy anything that hadn't been through that foreclosure process, because we rely on that to make sure, we basically rely on it to ensure that the properties we buy are clear of encumbrances, and that's what we use that for. So there are some amazing things that are happening, and really it's not stopping or even slowing down. It's only speeding up. You may have heard in history about the Great American Land Giveaway. You know, the first time that you know, the Oklahoma land rush, where people lined up and I think it was at noon, they were able to go and get a bunch of parcels. Well, we've noticed a trend. We've noticed something that has begun to happen with tax sales that is becoming very common, and it's amazing here what's happening. There are a lot of counties that have huge amounts of property that they are basically sitting on right now because it didn't sell at a tax sale for whatever reason. There's money owed on it. And traditionally in the past, counties would just kind of add any money that was owed onto it. So you'd end up getting properties that had a whole bunch of money owed on them that nobody would buy. Well, what we've also found with this is that counties are more interested in just getting somebody in the property that will pay for the property taxes, that they're willing in many cases to let go of the amount that's owed on the property and sell it simply for a flat fee. You know, they'll start it out for let's say an opening bid of $100, and they'll forgive the other money that is basically owed on it. But what we're finding with this is that counties are essentially giving away land. I mean, when you're buying property for $50 or for $100, it's essentially a land giveaway, and we're seeing this across the country.
Yeah, I mean, even if we are spending $500 or $1,000, you know, we're still looking at such a small discount, or we're buying these properties for such a small amount of their assessed value that really it's an incredible opportunity. I mean, like Shade said, you know, there's states and counties across the country that essentially had inventory that was underwater. There was more taxes owed than it was worth it to sell the property. And so instead of just sitting on these and continually, you know, getting more and more taxes and more underwater, the county wants to get rid of these properties and get them into the hands of new property owners that are paying property taxes. And so these opportunities can be purchased at auction. There's counties that have what's called resales, where they have an auction. We've seen this in California, we've seen this in Michigan and other states, Pennsylvania, where they'll start opening bids of $100, $500. You can also purchase these over the counter as well. And that's kind of what we want to talk about today. Is we want to talk about land itself.
Yeah, in fact, yeah, I think that we're going to talk about why we find the opportunities here to be really exciting, what we've learned about them, and why we found that we tend to like certain types of investments. In fact, a good question or a good statement we could make here is why we invest in raw land over land with improvements, which is something a lot of people have a hard time with. When you're looking at normal or traditional real estate investing, that doesn't always really make a lot of sense. You know, I think when people are thinking about real estate investments, they're usually thinking about owning some kind of property with improvement, or they figure that that's always where the money's at. But what we've found is that we really like raw land. And we like raw land because it offers some real benefits over any other type of investing. And well, in fact, let's talk about all of the different reasons why why we like raw land, because it's not like there's really just one reason. There are a ton of reasons. I mean, first off, we could say that raw land is the most common thing you're going to find at a tax sale. Okay, a good portion of the property that goes for a tax sale is going to be raw land, and so it's plentiful when it comes to tax sales, which is one of the reasons why we like it. We can always find raw land.
Oh yeah, well, and you know, there's going to be less risk, less complications. You know, essentially, when we're talking about raw land, I mean, if you're just getting started, if you're new to tax sale investing, if you haven't bought any property yet, then we usually are going to recommend purchasing some type of raw land, a building lot, and we'll go through and talk about the different types. But essentially pick that up because the transaction is going to be easier to do. That doesn't mean that as you get going, you're not going to want to look at single family homes, but there's just such an opportunity because of the less competition, because of the risk factor. Yeah,
in fact, there are so many different reasons here. One of the reasons why we like to do it is because a lot of the property that we invest in from out of state. So we don't live there. We don't, we're not there to be able to look at the property. And if it comes to property with improvements, well, we don't want to buy property with improvements unless we can lay eyes on the property. In other words, or we can have somebody else lay eyes on the property and get us images of it so that we can see what the current condition is. But when it comes to raw land, we don't have to worry about that. We don't have to worry about the condition of raw land because it doesn't have improvements there that are going to break down or, we need to check for the condition on. All we're really buying is just the land itself. So it makes that side of it easier for us. It simplifies the investment as well because we don't have to worry about what might be wrong with those improvements. It also reduces how much money we're spending. And, I would say that the majority of the property that we look at, the majority of the property that Steve and I conduct research on is property that we could pick up for between probably $100 and $1,500. I would say it's probably the majority. So we're talking about cheap real estate. We're talking about property you can pick up sometimes. We pick up a lot of property for a couple $100. And, those can be some fantastic properties at those prices. We don't have to spend $20,000 per investment. We can find great stuff for a lot less that's still very profitable. Yeah, and when you're picking up properties for 10, 15, 20 cents on the dollar, it's easy to turn around and flip that property for a profit because, we're paying so little on the property, we can still offer an incredible discount to another investor and still make a huge return. That's the one thing about real estate. That was what I learned as a real estate agent. One of the first things I learned when I got started with real estate was that nothing sells real estate like price. There's nothing, location, doesn't matter. Any of that stuff doesn't matter. Price is the most important thing, hands down. And so when we can buy a property for 10 cents on the dollar, sell it to an investor or to a neighbor for 40 or 50 cents on the dollar, they're still getting a huge return and they're still, getting a deal on the property, but we've just been able to make some pretty good return on it. And now we have more money to use in the next deals. Yeah, absolutely. Price really is the determining factor when you're investing. It's what's going to determine everything. Everything about the investment is going to come down to the price you pay. And tax sales and land specifically in tax sales is the absolute cheapest real estate that you're going to find available anywhere. And Steve mentions a good point in saying that the real estate is easier to sell because you're buying it for less. You can sell it essentially for less. And I think that's absolutely right. And it's right on a level that most people have a hard time grasping. When we buy property, we pay, generally speaking, we don't like to pay more than 10% of what it's worth. Yeah, well, there's some properties for lots. For single family homes, we'll pay more than that. But yeah, for building lots, essentially that's where we're at. Yeah, so for building lots, different types of land. For land, yeah. We'll pay basically 10% of what the property is estimated to be worth to buy the property. And we do that because it puts us in such a strong position as the seller and gives us a lot of options here in terms of what we're going to do with it. And it also eliminates a lot of risk. Oh, yeah. I mean, when you're buying property for 10 cents on the dollar, you've eliminated such a risk because, even in buying it for that little,
how hard is it going to be to turn around and sell it and still make a profit? I mean, even if you just sold it, you bought it for $500 and turned around and sold it for $1,500, you still were able to make $1,000 off that deal.
Yeah, it's kind of like finding a special method that allows you to buy Ferraris for 90% off. Okay, and so you're buying these Ferraris for $10,000, $20,000, and people ask you about how risky that is. Well, if you can buy a brand new Ferrari for $10,000 or $20,000, is that really risky? No, it's not risky because there's so much profitability in it, and it's going to be so easy to sell. You can always turn around and sell it. You basically have your options open to you because you bought it at such a low price.
Yeah, you have so much equity in the property.
And it's really that same situation here. And it also puts you in a unique position because most people buy property for pretty much what it costs or what it's worth. And so they sell it for pretty much what it's worth. And so you're going to be one of the rare people out there that can discount your property by 50% if you want, and you can still be profitable with it. You can offer discounts and benefits, advantages to people, incentives to buy that other people won't be able to do. So maybe we should show you some of the different types of land that we like or what it is that we're looking for. When we're looking at investing in raw land, what is it that we're looking for and what's important to us? There are a number of different attributes that matter when it comes to raw land. Some of those are size, the estimated value on it, the accessibility, the zoning, the use, and the exit strategy that's going to be employed with the property.
Yeah, exactly. When me and Shade are talking about any type of real estate, especially when it comes to land, we always talk about value and use. And all of these things are going to have a factor, but that's really what it comes down to. We need to have a property that's usable, and we need to have a property that's valuable. And we'll go through and talk about how each one of these fits into that.
Yeah, in fact, it's interesting because raw land is one of our favorite things to invest in, but at the same time, junk land can be the biggest risk you face as an investor. So
that's a good point.
It's a fine line between buying great investments and buying stuff that's basically junk. And what differentiates between the two in that line, it really comes down to the property's use and value. It comes down to to what the estimated value is in the property, what it's estimated worth, and the value of the property is usually determined by its use.
Exactly. When we're talking about the size of the property, that's something that we're always going to want to be aware of, because a lot of times you're going to find property that are 0.5 of an acre, 0.6 of an acre, and that are buildable.
Oh, you mean 0.0, like 0.05? Yeah.
Yeah. So essentially, less than 1/10 of an acre. We want to avoid any property that's not going to have value and use. And so if we're looking at a strip of land between two homes, even though it might have a little bit of value, the use is only available. The use can only be used by two people. So for that type of property, that's not something that we can market to the whole world. That's not something we can market to investors. And so we're going to want to make sure that the property is sized so that it's going to be buildable. If it's a lot, if it's raw land, essentially that's usually going to be bigger than a 0.1 of an acre anyway. But one thing that's nice about this is the property map systems. These map systems are so incredible. I mean, it makes it so helpful compared to what we used to have to deal with, because we can go on to many of these county websites and type in the map features, pull up the property records, and a lot of times these maps are going to have aerial imagery as well.
Yeah, in fact, we can do now in a matter of just a minute or two what used to require travel and going through physical records. Everything we do now is so much faster and easier now than it used to be. And Steve brought up some good points here when we're looking at property. Part of what we're looking at with the property is what it can potentially be used for, and that's going to come down to the size of the property and where it's located. But also, we're looking at who we can potentially sell it to, and that's one of the reasons why you see a piece of property between a couple of houses. it's probably not going to work out unless you had some kind of a special arrangement made with one of those people, because you've limited the number of people that might be potentially interested in your property. You basically have limited the potential buyers down to 2 or 3 people, that could benefit or use that property. Other than that, it's pretty well useless to everybody else in the world. So we try to focus on properties that that don't have that problem. We want to focus on properties that have a lot of use and that have decent value, but we can still pick up for a great price. And this is a good example of the types of properties that we like to target when it comes to raw land. In fact, I think this was an over-the-counter tax deed, meaning that it's just been sitting on the books. You can buy it at any point. It was already offered at a sale, so all that's left to do is just buy it from the county.
Yeah, exactly. I mean, in fact, this week we're working with one of our coaching students, and in this particular state purchased a couple of properties similar to this. When you're looking at this building lot, you can see that, it's there on a golf course. You can see a nice couple homes across the street. Overall, we're looking at a good building lot valued with an assessed value of $8,000 that we can pick up for $772. So in looking at this property, even if we turn around and sold it for $3 or $4 grand, we're still making a good return. When we're talking about land, one thing me and Shay don't want to be is we don't want to be greedy. If we're making a profit with these properties, we'd rather get rid of the property and make a good profit so that we can continue investing into more properties. That's the one thing about that you'll find as you get involved with purchase of land in some of these different states and these different auctions, is that there's always going to be more land. There's always more property. So if we can turn around and make a good profit on a property, we're going to get rid of it so that we can continue buying more property.
Yeah, and I think part of that is about understanding your role with the county and what the county is doing. The county, you'll find county governments are like a lot of other government entities in that, they're trying to do a lot of things, and they're not necessarily the most efficient at doing certain things, and one of those is the tax sales. They do their tax sales and they're just trying to perform what they're required to do, but they're not like a private business. They're not a private business that has been driven by profit, all of its time, and that's constantly looking for new ways to reinvent itself. Counties have never really operated like that until more recently. We're starting to see counties that are actually starting to treat different aspects of tax sales like an actual business and are making good decisions on it. But we understand, though, that what the county ultimately needs is they need investors like us to buy these properties and then to market and to be able to sell them, because that's what the counties don't really know how to do. They don't really know how to get people out there, to buy the property. They just try to get people even up to come out and buy the properties from the sale, but even then they fail sometimes.
Oh, absolutely. That's one thing that's changed with some of these online auctions, is it gives the county the ability to market it to a large group of people.
Yeah, we look at a lot of things when we're checking out properties, but the value of the property, historical values, and the deed to value ratio or the bid to value ratio is always an important thing that we're looking at, which basically is the percentage that the bid represents compared to the value of the property. So if it's a $1,000 bid on a property that's worth $10,000, and that's a 10% bid to value ratio.
Yeah, exactly. One thing that's so nice about is all this information, the assessed value, the historical value, the county sales history, all this information can be found within the county records and the county website. So as we're looking at the assessed value, the assessed value may only be a portion of what the market value or the estimated value is. So if, as we were looking at that last deed that was, $8,000, that was the assessed value. The market value may be closer to 10 or 12.
Mm-hmm. Yeah, and we're acting, as we buy, we're basically acting as wholesalers. We're buying it wholesale from the county, meaning that there's no middlemen in there. We're buying it for the absolute cheapest price that it can be bought for, and it can be up to us as far as how we decide to turn around and sell it. And basically, we can still have a good markup on it and sell it very quickly because we pay a really low percentage compared to what it's worth. Here's a couple other examples of properties that, in fact, I know the one on the left is one that we bought. I don't know if the one on the right is or not.
Yeah, the one on the, yeah, there's one that we were looking at and probably still going to purchase. So it's one that's on our list. But essentially, you know, the one on the left was a property we picked up for $500. You know, we can see it's a good building lot. It's one of the lots, one of the few lots left within the subdivision. We can see that the homes are newer and that, you know, it has a value of $2,500. So in picking up this property,
25,000.
yeah, 25,000, excuse me. So picking up this property for $500, you can see how much profit is available in it. Also with this commercial piece, this commercial lot as well. You know, it's 1.4 acres, has a value of about $350 and can be picked up over the counter for $750. It's probably like $754 or something right now, but essentially, you know, under $800.
Yeah, which these are some good examples of the types of properties that we like. You'll notice a couple things about these as well. They both have direct access to the road. You know, they're both large enough to be able to be used for buildings, essentially. And, you know, on top of that, they, you know, really, we can see that there's a limited amount of land that's available, but we're interested in properties where we can see that there's a trend that's already been occurring, like the building of the subdivision here off to our left. We know that that the other available lots in the area will also have value, and that people are eventually going to build in those places as well. So those are always a good buy because they're predictable.
Yeah, and with these two lots, these are actually what we would call improved residential lots. So, you know, when we're looking at this building lot within the subdivision, essentially the water, the power, all of that is going to be, available right there at the road. So with both of these lots, if you're going to hook into the utilities, it's very easy to do so. So there's going to be different types of lots that we're going to look at. Some of them will be improved residential lots like this, and some will be unimproved.
Yeah, and there can be advantages to both of them. Something else that we look at is to make sure that it's accessible by a main road, that it's not landlocked somewhere. Sometimes you'll find land that can't really be accessed without traveling through somebody else's property. And we avoid those properties as well because they have a limited amount of potential use. You know, we like to stick to ones that you can access from a public road, and we'll also look to make sure that the property doesn't have a bunch of easements on it.
Absolutely. You know, in fact, there's going to be some properties out there where really the property is used as an easement. That's what the property's, intention, or the reason the property is even there, is because there's essentially an easement, something like a drainage ditch. And so when we're talking about, use and accessibility, essentially we're talking about use and value. If there's use, it's going to have more value. Just as we saw as those other examples, the commercial property, because it has an additional use, is going to increase the value. So as you're looking at these properties, we're going to want to avoid any, small strips of land or irregular shaped properties. We're going to want to make sure that it has, access to a road, that it's not landlocked. And it is, as long as we're avoiding those type of properties, we're usually going to be hitting a home run.
We have a great question here from somebody that's saying, Zach's asking, some counties don't allow you to purchase over-the-counter land immediately after the auction. In Orange County, Florida, for example, you have to wait for 90 days. Why is this? That's a great question. And it's one of the things that we've also found with this is that the more counties we work with, the broader variety we see of methods and means for conducting their sales. The 90 days is a little bit long, but not unusual. We see most counties will put some kind of a time period between when their sale ends and when they'll offer the over-the-counter properties, and it's usually maybe closer to 30 days, but I could see it easily going up to 90 days. And I think part of that is just so they can try to get their ducks in a row before they.
Yeah, exactly. With Orange County, essentially, once they were, offered at the auction, and if we're talking about a tax lien or a tax deed, essentially they're going to have to notify people. So they're going to be notifying the property owners. They're going to be recording the deeds. Orange County may take a little bit longer than some of the other counties, but usually you're looking at anywhere between 30 to 90 days, before the county has gone through and essentially put those on the over-the-counter list.
But that's also, though, a really good point, though, Zach, in that you look for the properties immediately after the sale. You look for the over-the-counter properties immediately after the sale, which is a good time to look at over-the-counter properties. You want to be one of the first people to be able to, to get that list and to start to work those properties. Florida, in general, will have some over-the-counter deeds, but their system is so efficient from between their liens to deeds that they end up selling a lot of this stuff before they can really become over-the-counter deeds.
Yeah, if you're looking at over-the-counter deeds in Florida, or if you're looking at deeds in Florida, I guess I should say, one strategy that we recommend is looking and targeting land at some of the online auctions that you can pick up for a discount before it goes to sell. Sometimes you'll find good property, but if the property is good enough and if the price is low enough, a lot of times it's going to get at least a minimum bid at the auction. So there will be property, and there is good property. We found tons of good property that's been over the counter, but it could, essentially the bid to value ratio may be a little bit higher. Maybe it's 10 or 15 or 20%. Mm-hmm.
Which, a higher bid to value ratio can also still mean a good investment. That's part of the thing that's nice about going into it is that, maybe you're paying 20% of bid to value ratio rather than a 10% bid to value ratio, but it's still highly profitable. Here's another good example of the types of properties, and in fact, the billboards are something that we're personally learning about now and interested in getting involved with in different areas. But even something as simple as billboard space can be a source of not just a property you can invest in, but a property that you can use to create residual income. You can use to create regular monthly income, which is ultimately what you want if you're looking to try to replace an income.
Yeah, exactly. And essentially these, a billboard like this is available or was available directly on the over-the-counter list. So, these aren't properties these are properties that essentially were offered for sale and were available or are available directly over the counter.
Yeah, which we like that as well because we can basically purchase those at any point. We're not waiting. We don't have to wait for a sale or wait for paperwork. That way, we can decide what we like and then make payment arrangements on everything that's available. Zoning is also something that we look at with properties when we're going to pick them up, and the zoning is basically how the local government controls the use of land. It's essentially part of land use planning or urban planning. It's how the county or the area controls how the place is used and how it grows, and they want to ensure that there's some level of organization between where properties are located. They don't want to have industrial stuff in the middle of your residential neighborhoods. They don't want to have commercial property and in the middle of residential neighborhoods or residential neighborhood in the middle of commercial area.
Yeah, exactly. I mean, those two, residential and commercial can meet essentially, but you don't want to intermingle any of them. Mm-hmm. That's just kind of the way that it's done and the way it's always been done. There's going to be an area for commercial, there's residential, agricultural, industrial, but essentially the county's going to give different zoning classifications. The first one is going to be is the property improved or vacant. Improved could be a home, a commercial building, it could really be anything, a mobile home, but vacant is going to be any type of land. And then of course from there you'll have the individual zoning category where we're talking about residential or agricultural or whatever the property could be used for.
Yeah. Now we're interested in all different types. This one is another interesting example here. The value attached to it is by the county they say $8,000, but as we start to look at some of the homes, we find that the properties are actually worth closer to about $15,000. About double what the counties are saying that about double what the county has it listed as. And we can pick up a property like that This one's listed for 1,600. Still be a fantastic deal, and exactly the kind of thing that that we're looking at. Here's just some of the properties that land that we like to target versus land that we avoid. Let's talk for a second about what those are. What type of properties do we see that we run away from, and what are other things that we look at that are desirable.
Yeah, exactly. When we're targeting land, we're going to be looking for, as you can see, several different types of land. First, we're going to be looking for any type of improved lot. So that could be a commercial lot, it could be a residential lot, similar to the property that we showed you that we bought, that was in a residential community, was essentially an improved lot. We're also going to look for any type of non-improved residential land or commercial property. So this property, is essentially will have road access, but won't necessarily be improved. These are usually going to be your larger chunks of land. So when we're talking about residential or improved lots, we're usually talking about lots that are under an acre. When we're talking about non-improved residential land or commercial land, we're usually talking about larger pieces of land. Maybe it's a 5-acre residential property, or from there, we're also going to look at industrial zone land. We also like to focus on recreational land like hunting, camping, fishing, farmland. Really, we're looking for any piece of land that has both use and value.
Yeah, in fact, large plots of land, the larger a piece of land is, the better in so many ways. That's always a benefit with larger land. There's always so many different things that you can do with it. But we're looking for those larger pieces of land. If we're talking about what types of properties do we avoid, it's property that has little to no value, which according to the county will place some kind of an assessed value on pretty much all pieces of property. But the value they'd have would be minimal. Maybe they'll say it's valued at $200 to $1,000 or $1,500. But beyond that, though, what we're more concerned about even than that, when we're looking at the price, is at what the real world value of the property is. In other words, just because the county has an assessed value attached to it doesn't mean that it's a property that is being bought and sold, that somebody's willing to pay for it. Because ultimately, that's really something is only worth what somebody is willing to pay you for it. And that's what we want to find out when we're looking at some of these pieces of land, is we want to make sure that it's something that somebody would buy and because it has use. And sometimes we can tell that through things like the historical value of the property, what it's sold for in the past, but also where it's located and what the properties are selling for now. In terms of the types that we like, there are all sorts that we avoid, though. If we think it's too small, if we think it's landlocked, if we think it has easements or something, we'll avoid it. There's a lot of things that'll cause us to avoid a property.
Yeah, absolutely. And that's the one thing about over-the-counters or even any of these land type properties, even if we're talking about online auctions or live auctions, is that essentially there's such a great opportunity to pick these properties up, and so there's no need to buy a property that maybe have issues. If there's red flags, we're going to avoid it because we know there's going to be properties that don't have red flags. Something like she talked about, landlocked, land with easements. We're also going to avoid any properties with large governmental liens. When we're talking about the foreclosure process, essentially the foreclosure process will eliminate anything except for governmental liens. So if there's something like a mow lien or a cleanup lien, or something like that, that could still be attached to the property and we may still have to pay that. So because of that, we're going to check to see if there's any type of liens on the property. And if there is a governmental lien, then that would be a red flag and we would just choose another property.
Yeah, in fact, that's a really good point to bring up, in that when it comes to the judicial foreclosure process that properties go through when they don't pay delinquent property taxes, they're able to foreclose on the property as a result of first position liens, which first position lien is kind of like a government lien. It's like a tax lien is considered a first position lien. And it has to be in order for the county to be able to enforce property taxes. And the reason it has to be a first position lien is because the county has to have the power to foreclose on the property if nobody pays the property taxes. And the one exception to that is that they won't wipe out other government-based liens because they're other government liens, and they don't want to let those go. And because they're the county, they don't usually have to. And so it's easy enough to check for, though. And when Steve says, government liens, we're talking about things like if the weeds grow too high at the property and the county had to come in and cut them down, then they might attach a lien to the property and charge something for that. If there's other things like that, they could, if there's other things they need to do specifically with the property, they could add some kind of a lien like that. What's good to know about that, though, is that those liens aren't always humongous. In fact, a lot of times they're not a problem at all. We just check on them beforehand because we just account for them when we do find them. But it's easy to check for those types of liens just simply by contacting the the local area, local jurisdiction, or county.
Yeah, exactly. I mean, probably 90% of the liens that you will come across are going to be a city type lien. Like Shade mentioned, a Mo lien. There's also federal and state liens that could attach to it, something like an IRS lien. With an IRS lien, though, essentially it's just a process of time. You're not going to lose your money with an IRS lien. With an IRS lien, essentially, you send a form to the IRS. They have a 90-day, 60-day period to essentially pay you off and then take ownership of the property.
Yeah, basically, if there's an IRS lien, the IRS has to decide if they're going to utilize that lien or if they're going to let it go, and they'll have to decide one way or another. But Steve brings up a good point in that you're not going to lose your money either way. In fact, one of the things that we've learned here over the years is all of the different things that could potentially go wrong, and the surety, the investment. The investment works in so many different circumstances, and we've now been able to not only we've basically been able to see it happen. We know for a fact that it works, and there are so many different types of properties that you can invest in. This was a piece of raw land that we had one of our members invest in.
Yeah. One of our members picked this up. It actually paid $36 for the property. And, once they purchased it for $36, what we had them do was we had them send out a letter, and we'll talk about that in the strategies here in a second. But we just had them send out, 3 or 4 letters to the surrounding property owners. And so essentially he was just trying to wholesale this, and give a good deal to the neighbors. I mean, he only paid under $50 for it. So he was able to send out the send out letters to a couple of the neighbors. One of the neighbors contacted him back very quickly, and they, came up with a price of $1,500 for them to go ahead and sell it to him.
Yeah, which is a great deal. It's something where everybody wins in that situation. The investor here wins because they pick up a property for very little, and they can turn around and sell it for a profit. That's a skill. That's a real world skill that you learn and you develop, and that you will always be able to utilize. I mean, there just aren't that many people that understand tax sales well enough to be able to locate, evaluate, and purchase investments. And so, this is a true skill that's awesome to see somebody doing it, for a property like this. But for the person buying it, they didn't overpay for a property. They paid $1,500 for a property that's probably worth $5,000 to $10,000.
Absolutely. And in looking at this property, here's a good example to show what could be a useless property. We see this property here, and if we're looking on the right-hand side, we can see that it actually has, the properties behind this trailer that we can see in the left-hand picture, but you can see how the road goes all the way to the road access. So essentially, this property has a road that's owned, that essentially gives access to the property. If that road wasn't there, this property would be landlocked and be a property we would avoid.
Yeah.
So if that yellow road wasn't essentially there, we would go ahead and avoid it.
Yeah, absolutely. It's set back behind a lot of these properties, but that access road makes it fully accessible, and just like any of the other properties there that you can access from the side of the road. So great opportunity there. We love over the counter deeds, but we also like getting them from online auctions if we can. It really all kind of depends on the area that we're looking in, what kinds of opportunities we can find. If we can find good over-the-counter lists, we'll sit and work off the over-the-counter lists. But we also like to participate in auctions. And when you're targeting land in auctions, I think you've got an advantage there because most people aren't targeting the land. Most of the people are trying to target the improvements.
Yeah, exactly. And one thing that we love about land is the ability to sell it.
Mm-hmm.
The exit strategies that we can use, the ease of the ease of we can use it. Essentially, it just it makes it the all-around process pretty profitable.
Yeah, the land is nice in a lot of ways for all the reasons why it's easier to buy. It's also easier to sell. When people are buying land, buying real estate, if it's priced or valued up beyond a certain amount, chances are somebody's going to have some kind of a loan or something like that associated with it. And anytime there's a loan that's involved with a real estate transaction, the complexity of the transaction goes up dramatically. Okay. If you can, however, sell a property though for a cash price, if you can sell it for discounted price, you can use something as simple as a quitclaim deed to sign over ownership and make the process very simple rather than overly complicated. So we kind of like the simplicity that land offers for selling the property as well. If it costs less, chances are people won't need a loan. We also offer seller financing on a lot of land because it is a great way of finding more potential buyers and also creating some regular residual monthly income.
Yeah, that's the one thing that's sweet about seller financing or lease options on some type of land like farmland or hunting land or fishing land, is that you can earn a residual income off this type of property. A lot of times the reason people want to invest in single family homes or structured properties is so that they can earn residual income.
Mm-hmm.
Well, just because you're buying land doesn't mean that's not a possibility. In fact, you're going to find more people that want to do seller financing than even cash price. Seller financing is very easy to find a buyer who wants to do that.
Mm-hmm.
And you can go ahead and ask for a down payment that essentially probably pays for the property anyway. So if we bought one of these $500 lots and we were going to sell it for $10,000 through seller financing, we'd ask for $1,000 down. Would automatically, have paid the essential property, and then we would have a structured worked out where we're going to be receiving payments every single month. And if the buyer ends up not paying, that's not a problem. We'll just go ahead and relist it and go through the process again.
Yeah, we don't actually transfer, just like the bank when you are buying property. We don't actually transfer the name. We don't transfer the deed to the property over into the person's name until they've paid for the property in full. And so if we do offer seller financing, then yeah, like Steve said, we'll set it up so that we collect enough upfront to cover our initial investment plus profit, and then we will have a monthly payment amount set up. And the advantage that we have here is that we haven't transferred any kind of ownership yet. And so if the investor stops paying for it, we really don't have to take any kind of recourse or action because we haven't transferred it over into their name yet. So really all that means if somebody stops paying is that we'll have to resell it and find a new buyer. And which, that's not going to be a problem. We can do that. We're never at any real risk there when we're offering something like seller financing. And these monthly bills, you can do this with every single piece of land if you want. You could buy it and sell it with seller financing and have deals set up for payments of $100, $200 a month. You can set up just about any piece of land with something like seller financing and use it as a way to create, residual monthly income, and you're also making money on it as it appreciates in value. So you're basically making money on two different fronts at the same time.
Yeah, exactly. So let's go through each one of these, quickly and kind of talk about each one of them. As far as using a for sale sign, this can be one of the most effective ways to sell a property, because your local buyers are going to be driving past the property every day. And so this is going to be one of the first things or one of the easiest things to actually sell a property, because there's a good chance that somebody local may want the property.
Yeah, I think the only way that somebody there is, which locals are going to be the most likely people to buy, the only way that they can do so is if they know it's for sale. So it's always worth putting a for sale sign up. It allows people to recognize and see that it's for sale, and I think it's highly effective. We also kind of mentioned briefly the U.S. mail campaign. And how easy that can be to do. When we pick up properties, one of the first things we'll do sometimes is set up a simple mail campaign to notify some of the surrounding neighbors about the property being available. That's just kind of a common courtesy to them that I think that people appreciate. That if there's a property there that's going to be available, you're basically offering it at a discounted rate to the immediate neighbors first.
Yeah, exactly. Would send out a letter to the 3 or 4 property owners within that area, just like Shake mentioned before, saying that before we put this on the market to the general public, we want to give you guys an opportunity to pick this property up for a discount, for less than we're going to offer it. And a lot of times you're going to find that one of the next door neighbor, whoever may want that property, is more than willing to buy it from you, either paying a cash price for the property, or if you want to do some type of seller financing deal, that could work as well.
Yeah, we're kind of already out of time, but one thing we did want to mention or talk about here before the end of the day is something that we've started doing that we absolutely love doing, and it may be applicable to some of you. We really don't know, but that we've been working with people one-on-one in our mentoring, and for the right people, it has been an awesome experience, a really good chance for us to be able to work with people, help them find real estate, help them go through the process of both buying it and selling it so that they can be profitable with it. And it's mentoring that doesn't cost an arm and a leg. Our mentoring sessions are set up to cost much less than what traditional mentoring. Normally, if you want to get involved with mentoring, it's going to cost you, I don't know, at least $5 grand or 10 grand, for people if they want to get involved with it here. And you can get involved with mentoring with us for a lot less than that. It seems like we've got some introductory packages there that are between $1,000, $2,000. So
exactly. It's for a couple $1,000. And if you're interested in mentoring, go ahead and contact us. In addition to that, we also, of course, have our membership program available. Essentially, it's $29 a month. You can cancel at any time, and that's going to include all of our books, all of our auction list, our over-the-counter list. So all of these properties that we went through and looked at, these are going to be available on our over-the-counter list, and you can do that by signing up as a member.
Well, by the way, one of the questions here: how do you, as the seller, profit from appreciation if the arrangement with the buyer is seller financing? If we're selling a property, then we don't necessarily make money on that way. But if we are leasing the property in any way,
well, that's part of what that's part of the advantage for the seller, I guess. That's part of the selling point to sell it to the seller, is that they're going to be able to lock in that price.
Right.
So we're not going to really be worried about the appreciation. We're more going to be worried about the monthly payments coming in and making sure that they pay those, because if they don't pay them over that period of time, then we'll just go ahead and relist it again.
Yeah, and basically, as long as the properties are still in our name, then as they appreciate in value, we benefit from it. But no, you're right on that. Normally, if we sell a property, then you're not going to be making money on the appreciation down the road. But there's also a lot of things you can do where you don't necessarily sell a property, like lease options on properties, or having people just lease land for different uses, which can be a lot of things. I mean, people lease lots just to park things on them. in cases. There's so many different things that lots can be used for, and that you can use to create some kind of value there, even if it's just enough value that it covers the property taxes every year, and maybe makes a little bit of money, but that keeps the property in your name, under your ownership. It's a benefit or advantage there. If you have a portfolio of real estate that you own outright, that can be used in a lot of ways. It can be used, for you, it's basically value that you have. It's part of your net worth at that point. So you can use it to borrow more money if you wanted. It's an asset to you, definitely, once you have it.
Well, in some properties in some areas, even though most of our investors aren't doing this because they're looking to make income, could just sit on the property because those properties may be going up 5-10 cents a year in essentially market value. Yeah. So just sitting on the property, you're making money just by sitting on it.
Now, the last thing I think I would say is, if any of you are interested in the mentoring, send Steve or I an email, and we'll see if we can put together some kind of a custom package for you, because we've got a couple different openings left. It's right around the Christmas time. I think we are, we'd like to try to fill 1 or 2 more. And so if there's anybody that's interested, let us know, and we'll see if we can work out some kind of a deal that makes it worth your time to sign up.
Yeah, also, we'll go ahead and put this for a replay and send it out to you, email it to everyone that's attended, with links to the video and also any of the things that we've talked about.
Yeah, we really appreciate everybody joining us here this week, and we hope you'll join our normal membership. Also, as we didn't mention that, you can sign up for $29 a month if you want to just become a member and be able to access the website and attend our webinars and things like that. So really, I think we can help you just about anywhere you're at, whether you want to get heavily involved or whether you're just getting started. So thanks for joining us though today. We really appreciate it, and we'll hope to see you soon.
Yep, have a great week.